This is TechCrunch. For years now, when we think of mobile gaming, we think of app stores, right? Developers invest countless hours, months, or even years creating games just to surrender a significant portion, up to 30% of their earnings, to major players like Apple and Google. However, a newcomer has entered the scene, aiming to revolutionize this model. Jest is a marketplace for messaging games that recently emerged from stealth with $7 million in seed funding, and the company believes that the future of mobile gaming distribution will not come from an app store, but rather from within the messaging app. Jest's launch coincides with the rise of Rich Communication Services, or RCS, an enhanced version of SMS that enables more engaging experience through rich media, interactive features, and embedded payments. With RCS adoption growing, the landscape is shifting. In 2024, Apple joined the RCS movement with iOS 18, and by May of last year, RCS was supporting over 1 billion messages daily in the U.S., according to Google, that is. Well, Dejan Vitanov, CEO and co-founder of Jest, said in an interview with TechCrunch that mobile game developers have largely been locked into App Store distribution as the primary way to reach players. RCS games live in the messaging inbox, the stickiest surface on mobile, where people are already spending huge amounts of time talking to friends and family. We're building on an interaction pattern people already use every day. Jest offers users the ability to send games directly in their chat threads without having to visit an app store. Games launch in the web browser and require Wi-Fi to play. Now, this convenience is particularly impactful as consumers are downloading fewer games. Last year, mobile games were downloaded 39 billion times, reflecting an 8.6 year-over-year decline, following a nearly 7% drop from 2023 to 2024. That's according to App Figure's annual report. Jest's strategy is proving effective. By the end of January, just 4 months into its beta phase, the platform had already achieved 2 significant milestones: more than 1 million messaging games played and over 300,000 messages exchanged. Vitanov said, "We're seeing 3 to 4 times better retention than traditional mobile apps. That's a fundamental shift in the engagement curve. On the user acquisition front, we've completely validated that people will sign up and play games through messaging, with our early partners reporting 30 to 60% lower acquisition costs compared to mobile apps. It's remarkably simple. Just tap on a link and you're in." Additionally, what's more appealing about Jest's marketplace is the revenue model for developers. An impressive 90-10 split, with 90% of earnings going directly to the developers. This stands in contrast to the typical 30% commission taken by traditional app stores, offering a promising new avenue for gaming studios. Vitanov added that there's also a clever network effect built in. If one studio acquires a user but another studio monetizes them, we split the economics. 70% to the monetizing studio, 20% to the acquiring studio, and 10% to Jest. This creates powerful incentives where even viral games that don't monetize well can generate revenue streams for their developers when those users play other games on the platform. Notably, Jest has already attracted interest from several development partners, including teams behind popular titles such as Episode, Puppy Mansion, and Kingdom Maker. The seed funding, led by Innovation Endeavors, will go towards scaling the platform and onboarding the first group of gaming studios. To further accelerate growth, Jest has also launched a dedicated games fund to support studios at every stage of franchise development on the platform. This fund will deploy capital across 3 tiers: $1 million for flagship titles, $200,000 for promising mid-stage titles, and $40,000 for exploratory projects and experimental concepts. Currently, Jest is live in the U.S. and is set to expand to 14 additional countries by the third quarter of this year. Einride has secured an oversubscribed $113 million private investment in public equity ahead of its public debut, which is expected for the first half of this year. The Swedish startup is best known for building both electric trucks and autonomous pods that are designed to carry freight with no room for a human driver. Einride announced its plans to go public via a merger with a special purpose acquisition company, Legato Merger Corp., last November. The deal values Einride at a pre-money valuation of $1.35 billion, down from the $1.8 billion figure initially attached to the SPAC deal. Despite a drop in valuation, there's still clearly investor appetite for the firm. The PIPE exceeded the company's earlier target of up to $100 million. Einride's PIPE comes from new and existing investors, including a global asset management company based on the west coast of the U.S. and Stockholm-based EQT Ventures. In total, Einride has secured around $213 million tied to this transaction, including $100 million previously announced crossover financing. The SPAC, which will see Einride trading on the New York Stock Exchange, had been expected to deliver roughly $220 million from Legato's trust account. With the addition of the $113 million PIPE, the companies now project total gross proceeds of about $333 million before redemptions and expenses, though they say they may seek additional capital before closing. The proceeds will support Einride's technology roadmap, global expansion, and autonomous deployments in North America, Europe, and the Middle East. Outside of Sweden, Einride operates a fleet of 200 heavy-duty electric trucks in Europe, North America, and the UAE for companies like Heineken, PepsiCo, Carlsberg, Sweden, and DP World. The company has also done limited deployments of its autonomous pod-like trucks with customers, including Apatia in Sweden and GE Appliances in the U.S. Einride is not the first autonomous vehicle company to have pursued a SPAC merger in recent years for additional funding. Aurora Innovation went public via a SPAC merger valued at $13 billion back in 2021, and has since launched a commercial self-driving trucks operation with a human observer on board. Kodiak AI also took the SPAC road to the public market in 2025. That's all for now. Check back tomorrow for more from TechCrunch.